Thank you for being here, Jeff.
You're welcome.
I wanted to ask you
Great
about,
to be here.
Is it?
I love this place. I love back alleys. Just kind of nervous.
It's really light out. It's fine.
Oh.
Conventional loans.
Yes.
So a normal conventional loan, everybody's pretty familiar with that. What happens if you're buying a house or want to buy a house that needs work? Can a conventional loan do that? Like when I say mean work, like it means like needs a new roof, needs new siding, windows are broken, maybe the inside isn't finished. Like, do you have a product for that for a conventional home buyer?
I'm glad you asked that, Dominic, because we do.
Oh,
yes.
It's like a really random question.
We got a couple. It was pretty random, wasn't it? Out of the blue. But you know, it's interesting because we have been seeing a lot more clients reaching out for that type of a loan as well. So basically, you're looking at a house, you really like it, but it needs a lot of work, and where are you going to come up with the money? That's the big question. Well, we have an answer for you. It's conventional renovation loan. Fannie Mae has their own loan, and Freddie Mac has their own loan. Those are the two major conventional securitizers.
Are there different names for the Freddie Mac and Fannie Mae rehab loans?
Yeah, so Fannie Mae's got the home style renovation. That's the one that we do a lot of, and then choice renovation is Freddie Mac. So similar products, very similar interest rates and things like that.
When you say you use one more than the other, why do you do one more than the other?
That's, you know, it's just from habit, I guess, more than anything.
You're like, I like that button on the computer.
Yeah, I mean, they're very similar. Fannie Mae and Freddie Mac are both conforming conventional underwriting guidelines, so the guidelines are very, very similar. We do a lot of Fannie Mae, so we just have not had the opportunity to use Freddie Mac as often, I guess, so to speak.
Yeah, that works. What kind of things can you do with a conventional rehab loan, like on a house? Like, does it have to be specific things? Can it be like an entire down to studs remodel? Can it only be like, oh, you can only do furnaces? Like, what are your limitations there?
Yeah, there aren't very many limitations. You can literally rip it down to the studs and rebuild the house right all from ground up. So if you find a house that's older, dilapidated, and it just makes sense to start over practically, you can literally rip it down to the studs and rebuild it. I think in some cases you can even put a pool in and things like that. But again, you have to be concerned.
How many pools do you see put in?
I know.
Western
You got to be
Washington?
concerned about value. And yeah, a pool in Western Washington does not give us
So
a
when
lot
you
of
say
value.
when you say value though, so what does that mean? Like obviously the whole product in the end after the renovation's done has to appraise still, right?
Correct, yes. So basically the way the renovation loan works is we will get a as-is appraisal. Mm-hmm. And then as part of that appraisal, we'll also ask the appraiser to take into consideration all the improvements that we're going to do to the house.
Yeah.
So we'll give him a list, literally, and bids and everything. And then the appraiser will do a subject to appraisal as well.
Of like what the finished value might be.
What is the value going to be once all the work's done? We're actually going to utilize that finished value. So that is a concern potentially. I haven't had one that ran into any issues with the future value as far as the construction that's being done, but it is something that could be a limitation depending on what you're doing. So again, you can't over upgrade a house. You can't go become the white elephant of the neighborhood, so to speak.
Like I want the big pillars.
Yeah, and the gold bathroom.
So your time frames, like what is it? Like, is this, how long does it take to close a conventional loan with a rehab product? Like normally you're talking like what, 30, 45 days for most loans, but does this take longer?
I mean, it can definitely take longer. The biggest delays on conventional closings is typically getting the bids from the contractors.
Okay,
It also depends on the scope of the work. Like if we're doing a major remodel, for example, it might take longer to not only get the bids, but then we also have to make sure the bids are broken out properly. A lot of times the bids need to have what does it cost for the person doing it, and then what is the cost of the products that are going into the house? So it needs
to be breaking like the material costs and
labor
labor
material costs. And thank you, that was brilliant. You know more about this than I do. I appreciate that. So yeah, we have to break out the labor costs, and we need to break down the material costs. And then sometimes getting that bid alone, just getting it set up correctly, can take weeks. I mean, literally.
Especially if you're asking for a change for a contractor who's busy.
Exactly.
Okay, that makes sense. How long does a buyer have, or how long does the bank allow, or what's the expectation for once the home's actually closed and they own it to have the work completed and done? Is there requirements there?
There are definitely requirements. Again, it's going to depend on the scale of the work, what the completion rates are from the contractor. In some cases, you can get up to a year to complete the financing on that or complete the construction.
Holy crap. Anything else that you think people need to know about doing a renovation loan with a conventional loan product?
Yeah, a couple things. I mean, one, the rate is definitely higher in most cases on a renovation
So there's a little bit
loan.
of a cost to do business to get that cool product.
Yeah, but the cool thing is, and I've had this happen several times, is you go in, you buy a house, you're usually getting a better value for that house because it needs work in some cases. Then they put a bunch of money in it through the renovation loan, and then because the rates are higher, typically most people are looking to refinance, and what ends up happening is it's a double benefit. One is the value of the house a lot of times will come in quite a bit higher than what you bought it for, creating more equity and giving you an even better rate. And then when you refinance as well, you're just going to get a lower rate than a renovation loan anyway. So it could be a huge double benefit to get a lower rate, lower payment, and maybe even remove your mortgage insurance. If you get enough equity to pull 20% equity, it could be a huge win.
And then another side is there's not as many people going after homes that need a lot of work probably than a home that's finished.
Exactly.
Right?
It's actually like a really cool niche area to be looking for sure.
I like it. Well, thank you for answering questions about that random question.
I know, that was random, out of the blue, man.
Okay, so we're gonna
Caught me off guard on that. Dude, I had to do a little research.
My hands are so cold.